Welcome, Washington, D.C. Metro, to Real Estate Radio, the most important hour of radio every Monday on 1580 AM, The Big Talker. Thank you for joining me this afternoon. For those of you who don't know, Real Estate Radio is a show dedicated to building the Washington, D.C. housing and credit markets. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice. That's my message, and I'll be delivering it to you every Monday from 2 to 3 p.m. right here on 1580 The Big Talker. And we've got some great stuff lined up for you guys today. But before we jump into that, joining me on our panel this afternoon, first is Louis Cammarosano, who's the general manager of HomeGain. Louis is an industry leader and has been constantly ranked in Inman News top 100 most influential leaders in the technology sector for numerous years running now. And coming up at 2:30 is Ed Blazek, the president of Blazek Building Inspection Services, discuss the top maintenance tips for first-time home buyers, as well as why it is so important to have a pre-purchase inspection on as-is properties like foreclosures and short sales. So it's going to be some great information, so make sure you stay tuned. Louis, you there? Well, we're trying to get Louis back. We're going to cover basically some of the topics. Louis, are you there?
I'm here.
How you doing, Louis? Did you have a good weekend?
Happy Easter to you.
Happy Easter to you as well, sir. So we've had, we had a pretty big week last week, but this week is going to be huge. Not sure if you saw, but, on Wednesday is going to be the Fed meeting where they basically determine where they're going to go from here. But the Fed chief, Ben Bernanke, is actually going to have an unprecedented 45-minute press conference after the meeting. Now, for all of you out there that this doesn't really mean much, normally the Fed releases a short policy statement after the meeting at 2:15 p.m., and that'll be about it. But now, moving ahead this week, Bernanke's going to actually hold his news conference, allowing reporters to ask questions. Supposedly, they're trying to increase certainty and to add stability in the markets, removing much of the speculation about what the Fed actually means with their very vague and convoluted statements. But I tend to think that this is not going to do anything. I mean, it might add some clarity, but doubtful. What do you think, Louis?
Well, I think the good news is it'll make them appear more foolish if they make any public statements that don't make any sense, and you can go back 6 months later and say, here's what they said.
Right. Absolutely.
Because normally what they do is they, as you mentioned, they put out these convoluted statements that don't mean anything, and then they can deny all responsibility for what happened or say it was unforeseen. But now, I mean, some of the tough questions that will come out will be what happens when you stop QE2? Who's going to pick up the slack? Who's going to buy the debt? How are we going to fund these deficits? And how are you going to keep the economy rolling without all this free money? I mean, those are the tough questions. If people don't ask them, and it's a waste of time.
Right.
If they do ask them, you'll probably get some convoluted answer about how there is no problem, there is no inflation, everyone wants the dollar, and so on.
Right.
Employment's coming back. You'll hear all these things, and then you can go back and say, well, wait a minute, the Fed policy was wrong. And we have him on record as saying these things, and they didn't make any sense when he said them. And in retrospect, they make even less sense.
Yeah,
that's what I hope it is. But
yeah, I do too, and I really hope that some of the reporters that are there are ask more intelligent questions, more probing questions. Like, I know you say that the oil prices, the rising and gas prices going up, really are not affecting what's going on. But what's going to happen if they were to go to $5 or $6? Because obviously, in his head, he's got to have some model at some price point that he has to step in and do something. And moving forward, they, with all the MBS buying, which is when the Fed went in and was buying trillions of dollars in mortgage-backed securities, like you had just suggested, when are they going to start to pull out from that? When those securities start to mature, who's going to buy those? Yeah, what do they expect the reaction to that going to be? Exactly. When that reaction takes place, is it going to be a spike in interest rates from, where our present levels, where they're somewhere around, 4.75, around the 5% range for the last 3 weeks? Is it going to be a spike up to 6%? Well, Ryan, the other thing they could do is QE1 and QE2 were fully announced and transparent that they were doing it, but that the Fed does things that you don't know about. So they could do QE3 without announcing it and just be the secret buyer. There have been reports that that's actually what's going on right now. They're not going to have – the worst thing that can happen is a failed auction when China decides that there's been speculation for the last year or so that they want to reduce their dollar holdings, get into gold and silver. Most of the gold in the world is held by the Western banks, not by Chinese. Yes. And they probably feel a little out in the cold, and so they've been trying to quietly buy up some gold to buttress the RMB. Yep. Well, it's interesting, Lewis, and I know sometimes we can talk about some of this technical stuff that the Fed's doing, but to break this down to listeners so they can really understand, like how is this going to affect people trying to obtain a mortgage, or how is it going to affect people that are trying to buy a house in the next 6 to 12 months? I mean, the simplest thing to me is if the Fed doesn't continue to stimulate with quantitative easing, or also known as printing more money to keep buying these mortgage-backed securities and Treasury, our own debt, then chances are interest rates are going to shoot through the roof. The Mortgage Bankers Association is actually quoted as saying that they believe by the fourth quarter of 2012 that rates can spike to about 6%. I'm going to take that a step further. If they don't figure out something, legitimate as far as our deficit's concerned, and as a way for private money to come in and start buying mortgage-backed securities as well as Treasuries, rates could go to 7 or 8% really fast.
Sure. Right now you have runaway monetary policy, and what we mean by monetary policy is what the Fed does, which basically means prints up money to buy U.S. Treasuries. And then you have runaway fiscal policy with a $14 trillion deficit and an annual deficit over $1.3 trillion. And then what you have is no will on the side of the Fed to really pull back off the, Ben Bernanke once said something that we have something that other countries don't have. It's called the printing press. And if things ever got bad, he says he's a student of the Great Depression. You can always throw money out of helicopters. So that's what you have on the one side on monetary policy. And then on the fiscal side, you have Congress, which isn't willing really to make any significant reductions. As we mentioned last week, they battled over about $10-15 billion, each calling the other extreme. And then you have a president who puts forth a reduction program but doesn't reduce anything, and then he blames the rise in oil prices on speculation. Well, now he's going to investigate whether there's speculation. He's going to use more government resources when it's not speculation that's causing oil prices to rise. It's the dollar, and it's the fiscal and monetary policies which are out of control. And if he's going to investigate speculation, he might as well investigate the rising prices of gold, silver, copper, nickel, wheat. All commodities are going up as a result of this fiscal and monetary policy disaster that we have. The real speculation, Ryan, is in the dollar, that somehow you can speculate that you can have a $14 trillion deficit and no interest in reducing that deficit, and that you're printing money, and somehow the dollar is going to still be worth something. That's the real speculation that we have.
Absolutely. You're listening to Real Estate Radio. I'm your host, Ryan Sloper, joined by Louis Cammarosano, who is the general manager of HomeGain. You can check them out at homegain.com. Louis, it's interesting to note that, we've been preaching week after week that just watch oil prices, watch silver and gold and where they're heading. I mean, I'm seeing headlines today, $50 silver coming any day now. I mean, we saw this a long time ago. Remember,
106% in 6 months, Ryan.
Exactly. It's absurd. And you know what? I honestly think that silver hasn't stopped. I think this is really going to go up above $100 here relatively quickly because, the further that people watch our dollar slide, which that is going to continue, it's inevitable. The more people are going to have to buy silver because it's cheaper than gold. More people can enter into that market. So you're really going to see silver prices shoot through the roof.
Silver is seen as both a monetary and industrial metal, and the increase in the somewhat rebounding of the global economy is using more silver. But the real demand is coming from the investment side, and you're right.
Yes.
People are buying silver as a hedge against the falling dollar. And unlike in 1980 when you hit the silver nominal high of $50, the rest of the world, the Chinese and the Indians, didn't have the kind of money they have now to buy silver, and the average person in the street in China and India is also buying silver. So you're seeing this. Now, how this all affects real estate, it really is the canary in the coal mine that if the dollar goes down, interest rates will have to follow because in order to protect the dollar, the only thing you can do is stop spending and raise interest rates to make dollar-denominated assets more attractive.
Yeah. Yeah, and like I said, I've talked to a lot of smart individuals on the investment side, and they've all told me that a lot of what they're doing is making plays on silver and gold because they know, over a period of time that if they can capitalize this and end up, eventually down the road converting their silver, selling that off and buying, assets such as buying homes or investment properties where they can have some sort of cash flow down the road, but that's just not here yet.
Well, sure, and if you don't have the resources right now to purchase hard assets, getting a loan at these low interest rates becomes an asset in the future when you have high inflation. Because you're paying back in inflated dollars, and you're going to own that asset when you pay back that low interest loan. in a time when, 2 or 3 years from now, interest rates are 8, 9, 10%.
Yeah, and this is huge for you guys out there that are contemplating right now what you're going to do financially. Are you going to rent a home? Are you going to buy a home? And how is inflation and the rise in interest rates that's going to occur sometime down the line? It could be next week, could be next month, or could be 2 years from now. What are you guys doing to protect yourself against this future inflation?
Well, renting a property could be quite risky if you don't have rent control, because when you're having inflation, they're going to raise the price of your rent, and if you have stagflation, you may not get a raise in your salary. You may lose your job. So at this point now, buying a home might make sense, especially if your mortgage payment today would be lower than the cost of rental, and in inflated dollars, your mortgage would be 20, 30% lower.
Absolutely, and you got to figure, there's a lot of people out there with a lot of cash on the sideline. They're probably the guys right now that are able to buy the silver and gold. They have a lot of cash on hand that they can actually buy this. And when, interest rates rise down the road, who's going to be able to afford to pay cash for those properties, which then rent prices are going to go up even further?
Exactly. So, you'll have a squeeze on the available rental properties.
Yeah, and we're already seeing that right now in the Northern Virginia, Washington, D.C. metropolitan area where, the supply is very limited. And, investors that can get their hands on these properties around here, they just know that, the Washington, D.C. metro area is a great area for jobs. So people are constantly moving here. As a matter of fact, I've talked to more people that are moving in here in the last, 30 days than I have in the last 3 years. So it really seems like there's been a big shift for people that are just like, I'm tired of where I'm at. I just got to go where the jobs are more plentiful, and they're coming here. But when they get here, they're realizing, wow, I was making 25 where I'm at. I'm going to go to Washington, D.C. and make 50, but the cost of housing jumps through the roof.
Right.
So,
you know what else is interesting is if we see that there's really no interest in cutting government spending, the government jobs are good ones to have because you won't lose it.
Yeah,
you have job security. You live in the D.C. area if you're working, and there's really no serious effort made to cut government spending, then you've got a good job, you've got a low-price mortgage, and you're pretty much set. Now, that could all change if the government smartens up and decides we need, like in some of the states, 10, 15% cuts across the board. But there doesn't seem to be the political will to do that right now.
Yeah, absolutely. It's funny you bring that up, Louis, because I had an interesting conversation over Easter dinner yesterday where I was discussing with a gentleman that holds a government position as well, and it's just kind of funny that those people that have those government jobs know that they're probably going to stay in them, and it's very hard. They don't really fire anybody.
Well, they also, I saw a statistic about less than 1% don't get the raise every year.
Exactly.
You're going to get the raise, and you're probably going to be in a position to get some kind of cost of living, while those in the private sector are not.
And you know what? What's interesting about it is the productivity level of those employees is a lot less than what you have in these private companies.
Well, how do you measure productivity in the Department of Education and the Department of Energy anyway?
Right. Yeah, well...
They don't produce any energy, and they don't teach anyone, so it's very hard to say what they produce.
But let's just say that, exactly, you can't really measure that, but I tend to think that the government sometimes hires 3 employees for what a private sector company would hire 1 employee for.
And they don't do the overtime. That's right. You mentioned on a prior show that what employers are doing, and it's true. You're just getting more out of your existing employees.
Exactly.
But I don't think the government does that.
Well, and then that all correlates back to our deficit and why we keep increasing. Actual government jobs instead of decreasing them, and getting rid of the actual departments that we don't need or that really aren't being so to speak productive, as far as helping stimulate better jobs, better education, whatever it may be, innovation.
Well, those are the philosophical debates that no one's really having. No one's really saying that there shouldn't be these departments. They're talking about cuts around the edges. No one's really saying everybody's talking about what the Federal Reserve should do or how they should act, not whether there should be one at all.
Yeah.
And I think until people have those debates, you're having these status quo type of discussions where really nothing really moves. And if you're in a situation where you're owed $14 trillion, you really need to make dramatic changes. Yep. And in the way you look at what should government do, how much can government spend, and where does the money come from?
Absolutely. You're listening to Real Estate Radio. I'm your host, Ryan Sloper, joined by Louis Cammarosano, General Manager of HomeGain. Remember, guys, if you have any questions, concerns about your credit or real estate needs, best number to reach out to us is 877-245-2030. That's 877-245-2030. Louis, I have I've been thinking about this for a while. There've been a lot of I don't know what you want to call it, people promoting Donald Trump running for president lately. And I think it was at the beginning kind of just one of those publicity stunts, but now it's kind of turned into people are like actually giving some sort of clout to this idea. And, on one side, I'm really thinking, for so long we've had basically talking heads running this country instead of actual businessmen. And as far as where we sit as an economy right now with this deficit, honestly, we need some sort of, corporate CEO type that can come in and say, these are the tough decisions we have to make. And if we do not make them, our country will just continue to unravel.
I agree with that, but I think most of the corporate CEO types that end up in and around government owe their existence to government favors.
Yes.
I would prefer what the founders wanted, were to have people from ordinary walks of life, the butcher, the baker, the candlestick maker, the ones who actually run the business without any favors and understand how to manage debt, how to supply the customer, and where money comes from. But if you go for these big corporate CEO types, they're really already kind of owe their existence in part to government contracts, government favors, and so on. So that's not really going to get the job done.
Yeah.
The entire, if you look at Congress and the Senate, most of those people in there, they don't come from ordinary walks of life. They've walked into a congressional or Senate job basically as a career once they graduated college or whatever poli-sci major they took in graduate school.
Yeah.
I don't think the president had a job. I think he's been, he's been in government his whole life. Most of them, if you go down the line, have been in government their whole life, so they have no real-world experience, and then they go to academia to get economic advice, and the economic advice they give them is basically counterfeiting works.
Well, we see what the economic advice does as far as the Fed's concerned. I mean,
your economists aren't basically people who have, run a business or anything like that. They've read a lot of Keynes and listen to each other.
Yeah, and I do agree with you, Lewis, but, us being realistic here, I mean, that guy, the baker, the butcher that we're talking about, that's there on the ground level, that started a business, that's thrived in his business, and that, knows what real-world experience is, how he could, maneuver that into being potentially president of the United States. But they don't have the means or the money. We know that's never going to happen, so it's like, what's the lesser of two evils? You know what I mean?
I agree, but I think you do have. I read somewhere that doctors in the new Republican and Democratic classes were fairly well represented, and they're the ones who run a business. I think Rand Paul got in. He's a senator.
Yes.
And possibly if he wanted to run for president, he could, and he's run a business. So it's not that far out of the realm for people to have normal workaday jobs who understand what it's like to, you ask a president, I think in the last 10, 15 years, I think they've asked Bush this, how much is a gallon of milk? They have no idea.
Right.
They don't know. They now know what gas prices are, but most of the politicians don't lead normal lives where they're relying on a paycheck from the public sector or they're creating jobs in the public sector.
Well, yeah, I was actually listening to something the other night when they were talking about
in the private sector.
Yeah, well, they were talking about potential candidates that, could run, and they were like, well, I don't know if he can run or she can run. I don't know if they're up to date on this list of issues, because basically they provide them a list of all the important relevant issues, and they need to formulate an opinion and ideas of what to do. You know what I mean? So it's like, to me, I want to hire somebody that already has an opinion about all those things without having to sit down and have somebody research it for them.
Well, you know what they're going to have, though, Ryan, with somebody like you say, like, for example, Donald Trump? He's probably not going to have opinions on Supreme Court decisions. He's not going to have opinions on a lot of the issues that career politicians are very au fait with.
Right. I agree with some foreign policy issues and stuff like that.
And you hear what he says. He just says, we'll just go and take the oil fields from Libya. I'm going to be tough with China. And Obama wasn't born in the United States. Right. That gets people all excited, but that doesn't show any real depth.
Yeah, I definitely agree. You're listening to Real Estate Radio. I'm your host, Ryan Slipper, joined by General Manager of Home Gain, Louis Cammarosano. We're going to jump into the Word on Wealth. This segment is meant to give you an overview of what happened in the market last week and anything that impacts you, the consumer, financially. Now, this segment was brought to you by Home Gain. Home Gain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. So go to homegain.com today and see what I'm talking about. All you have to do is type in your property address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's free. So make sure you check that out today. It's homegain.com. So, we did see some better things happening last week, especially in real estate. On Monday, the market got crushed. The big story was Standard & Poor's downgrades to the U.S. debt rating. Bottom line, this is a smack in the face of our politicians to come up with a budget agreement. We keep spending. We're going to go bankrupt, and it's pretty much that simple. On Tuesday, housing starts and building permits were released and turned out very positive. This is a better sign for housing. Also, 2/3 of the states are showing improvement in their job markets. I mean, I don't know. I kind of agree a little bit there, but the job markets have been bouncing back and forth, so it's really nothing that significant. On Wednesday, existing home sales rose to 3.7% in March, and the Dow was up over 200 points. On Thursday, initial jobless claims, the week ending April 16th, came back with a seasonally adjusted number of 403,000, which is a decrease of 13,000 jobs from the previous week. It's interesting, Lewis, just kind of, these numbers, like I said, they go back and forth every week. So 1 week they're good, 1 week they're bad, 1 week they're good, 1 week they're bad. I think that, finally, I think this week is just a big week because, like you said, there's going to be some sort of, hopefully, clarity amongst what the Fed's doing, because I think that everything that's happening right now in the stock market and in the bond market, it's being driven by the Fed and what people's take on what they're going to do is. So if they can offer some sort of guidance and, what if situations, what if oil prices or gas prices go to $5 to $6 a gallon, what they're going to do, and what if the dollar continues to devalue, even though that's not part of their formula? They don't pay attention to that. It's going to be interesting if we can get those questions thrown out and if we can get them answered.
Well, what's going to happen, if you combine what the political winds say, is somehow the people in charge right now think that a weak dollar is good for the U.S. because it'll increase our exports.
Yep.
I don't know what we're going to export, but that's what they say.
Right.
So that gives Bernanke cover to continue doing what he's doing with his helicopter, dropping the dollars off the helicopter. And because you don't have buyers stepping up, we always talk about China, but Japan is no longer in a position to continue being the number 2 purchaser of U.S. Treasuries.
They have to rebuild their country.
Sure, and they've issued their own stimulus to kind of rebuild the country. So the Fed is in a bind because even if you argue that QE2 is working and the stimulus is working, it's not working enough to say that the economy is going to drive itself on its own if you pull it back. So if you pull it back now, you're going to hear the cries of Krugman, it was not enough, and that's why we collapsed. So they're really in a position where they kind of have to continue the money printing.
Yeah, absolutely.
Is not going to end well. But the other way is if they stop, you will see, as you mentioned, a ratcheting up of a lot of other problems that'll be short-term, probably better off for everyone in the long term, but I don't think anyone's willing to really just like when you had the bailouts.
Yeah.
If you would allow the big banks to fail, we'd probably be past that by now, but at the time would have caused a tremendous amount of distress.
Yep.
And no one likes to make that type of decision. So they'll keep kicking the can down the road. If you think about Bernanke, his job, he's in there for another few years?
Yep.
He's not going to take the hardest decision right now.
No, absolutely not.
He's going to play middle of the road, and they'll try to keep the interest rates low, and they'll try to keep, some type of QE3 going in some fashion.
Yep.
Which means, though, unfortunately, the interest rates, we've been saying they're going to rise, they're going to rise, they're going to rise, and in a free market they would, but you may have more time to buy, if they don't commit to pull back the stimulus.
Yeah, and let's just hope that they do stay low for a lot of people out there that are searching right now. Lewis, we have about 1 minute, but would you just had your first quarter release of Virginia home price results? Would you mind giving listeners that the results of that survey and where they can find it?
Sure. If you go to homegain.com and you go to the home page, you could see all of the HomeGain home prices survey. We do it quarterly, and we run the national and the regional numbers. And we also do it by selected states. It's about 18, 20 states. What's interesting is in Virginia, the realtors in Virginia actually believe 41% of them that home prices will increase in the next 6 months. And then nationally, that number is only 17% amongst agents and real estate professionals. Virginia homeowners are also fairly confident in home prices. They think 32% of them think they will increase, and 43% think they will stay the same. So you definitely see a divergence between the Virginia real estate market, which appears to be, I wouldn't say robust, but appears to be fairly stable in many instances, prices rising, and then the national market numbers are pretty much the opposite.
Yeah, well, that is good news. I mean, I'm always, it's good to hear that not only agents, but actually people that are out there actually having similar takes. That's good.
And it reflects the reality of your market.
Absolutely. Yeah, I think that's good, Lewis. And anybody that wants to check that out, make sure you go to homegain.com to check out the blog. You're listening to Real Estate Radio. When we come back, we're going to jump into conversation with Ed Blazek, the president of Blazek Building Inspections, on the top maintenance tips for first-time home buyers. Stay right there.